Consensus seems to be that 4,482 is key chart support and that the bourse remains in a bull channel. What's your perspective on the market right now and where we're at the moment?
Well, thank you very much, Alishia. It's a pleasure to be here. Well, looking at it in terms of support levels for the NSE 20, yes, 4,400 would be a mark to be able to agree on. Basically, looking at it in terms of the corporate actions that are coming through, the demand-supply behavior of the market as of now, and especially some of the price wars that you're seeing on some of the listed counters like Safaricom. You're seeing a bit of a seesawing behavior of the market, but it is not dropping, and it's getting quite a bit of support level, a lot of foreign demand, which is still coming in despite the prices going down.
Well, talking about foreign demand, lots of interest being shown for African banks in general. And with that, let's run through some of Kenya's banking operations specifically. We have KCB trading at a steep discount to its peers at the moment, but the rights issue being expected to put to action its extension of its regional footprint. What's your view on KCB right now?
Well, looking at Kenya Commercial Bank in terms of their stability, especially in terms of their balance sheet, their capital base as of now is very good, and it is positioning them very well to be able to take advantage of the region and also to be able to take advantage of some of the anticipated reaction in terms of the political climate as well as economic growth that we are seeing. When we are talking about 5% economic growth, it presents a lot of opportunity for banking sector to be able to bridge the gap in terms of financing projects as well as infrastructural development. And looking at their regional footprint as at now in terms of Kenya, East African region, basically they are well positioned to be able to take advantage of that in terms of their mortgage lending as well as some of the product offerings that they have.
To what extent are you anticipating a price rally on KCB in anticipation of those future growth prospects where that doesn't seem to have been fully reflected in that share price?
Well, looking at it in terms of the value of the stock as at now, yes, just as you noted there, we are seeing it trading at a bit of a discounted price, mainly because of the rights issue. The investors had developed a lot of cold feet because the rights issue was priced at around 17 shillings, and we saw a lot of people opting out because they expected the rights issue to dilute the share price. But looking at it in terms of the post-rights issue price, definitely it's looking like it's getting a lot of support, and right now it's even hitting 19 shillings, and the demand is also fairly strong on such a counter because looking at it in terms of its fellow finance stocks, we're seeing it still trading at a discount, and for it right now it's a very promising buy.
While there's some speculation on whether or not we're going to see Standard Chartered enter the bidding war for South Africa's Nedbank, this is a bank already with an extensive African footprint. In Kenya, it's released its rights issue schedule. Update us on the performance we're seeing there, where 2.5 billion shillings rights issue has been set at the price of 165 shillings or 45, and it's been pretty much in focus because of the steep discount on offer.
Well, thank you very much. Standard Chartered has been one of the most conservative banking institutions we've seen in our industry. Yet looking at them in terms of their strategy, we must admit that it's one of the banks which has been very, very focused in terms of their approach. They have been very cautious about expanding in terms of even their branch network. Right now, it has very few branches, yet it's been able to develop a very good IT platform. And its product offering, especially to professionals as well as institutional clients, has been very, very good. And looking at them, especially in terms of their capital bases at now and the strategy they have for the rights issue, it's very well positioned because right now they're thinking about buying custodial services as well as trying to expand into the region, and hopefully they'll be very well positioned. And what has happened, especially on the share, is that there had been a lot of speculation because the price of the rights issue was not very clear, and so we saw the share going all the way to 300 shillings. But once the information of the rights issue became public, we saw people thinking about getting out and taking advantage of the rights from that approach. As that the direction going forward, basically Standard Chartered is still a very good and promising buy.
Well, where we've got KCB, Standard Chartered and Equity Bank all pushing ahead, it's come as a bit of a surprise, Samuel, that we've seen Barclays Bank, which posted a 5% growth in its first half pre-tax profit recently, with warnings of even further pressure on margins moving forward, announced that it will not issue the final 2 billion shillings of a medium-term note because it has sufficient funds to pursue its growth strategy. Market reaction to that, and are you confident that they have enough muscle to actually compete against some of these other players who are pushing aggressively forward?
Well, looking at Barclays and their strategy, well, it's been one of the banks which has been a lot affected by the strategy, especially looking at it from the fact that in the medium term, especially the last few years, we saw them reducing their branch network. Then at some point, they changed their strategy and started expanding and trying to see whether they can be able to still get a lot of customer base in terms of the product offering. And looking at them, especially going forward right now, I guess right now they are more concerned about their share price, which basically has been fairly depressed at around 66 and almost going down at some point to 43. And thinking of a rights issue for them would be a bit of a concern, because I guess they're concerned about how that's going to affect their share price. But in terms of their performance, one of the things that their managing director was mentioning was that the spread of most of these institutions has been affected in terms of how they're going to be able to make money on the interest income. Yeah. And their source of financing as at now, I think their strategy is more of looking at Barclays PLC to see whether they can be able to get more financing from abroad.